In this video, we will be discussing a unique recovery mechanism to be used in Forex trading or with expert advisors. So, what is a recovery-based system or mechanism? In Forex trading or in trading in general, recovery usually refers to some method of scaling lots or scaling your trading size post a loser so that your next trade can recover the previous losses and bring you back to a break-even point. And in Forex, the most common method you'll see this of being done is the grid martingale system, where effectively people will open a series of trades with increasing lot size as price goes in the opposite direction of their initial order. And they hope that eventually the market will turn around and the last order open within that grid will cover the losses from the previous trades, and you will end at either a break even or in a slight profit. And many expert advisors, particularly on the MQL5 marketplace, are based on this system, as it typically results in fairly consistent profits until it inevitably blows up. So that's not necessarily, in my opinion, the best method of recovery-based trading. However, there's quite a few other methods, and this particular one that I want to discuss today is quite a unique and interesting take on it. And effectively, I saw this one when I did my previous bot review of the Gold XL MT5, which is a bot which is currently on the MT5 marketplace. And because it was very similar to one of my bots, the Golden Timebomb, except it also had a recovery mechanism, I was really interested in reverse engineering it and effectively running back tests and creating a new version of Timebomb where you could effectively test recovery and no recovery with a series of different filters just to compare the performance. So that was effectively my experiment. And in this short video, I'm going to actually take you through the different results of using recovery versus non-recovery, as well as show you how this impacts both gold and US 30. But first of all, we can essentially discuss why recovery is so common. And really, the reason for that is people don't like to lose, and it's just human nature, right? Nobody likes to lose money. And recovery systems oftentimes increase your win rate, or in the case of certain ones, they delay losses for a very long period of time. And this is what makes them super attractive. It doesn't necessarily make them good as trading systems. However, sometimes it's very infrequent that you have multiple losers in a row, particularly with a certain type of high win rate system. So recovery can actually work in these situations just because, yes, it is possible that you eventually hit the recovery mechanism. However, if it's relatively infrequent, you can still have a very positively sloping equity curve. So with high win rate systems in particular, it can actually be quite an interesting approach to take. So the reason why I wanted to test this with Timebomb specifically, in addition to seeing it being used in a very similar bot of the Gold XL, is because I've been running Golden Timebomb for several months live by now, and I've observed its trading behavior. And quite frankly, it's very rare that Golden Timebomb has more than one loser in a row. And even these past couple of weeks have been a drawdown period for Golden Timebomb. But even if you look at the distribution of losses relative to winners, it's still relatively rare if you go through its entire MyFX book history that it has 2 losses in a row. And I also thought that perhaps using some intelligent filters, such as news filters, we might be able to actually even further reduce the frequency of that happening. So I wanted to run a few different experiments based on that. But this system only works if you're able to have, or this type of recovery system only works if you have a super high win rate. So in Golden Timebomb or in most scalping bots, the stop loss is significantly larger than the take profit. Therefore, you're just through the laws of probabilities, you're going to have a very high win rate. Like you have roughly an 80% win rate in the case of Golden Timebomb. And just if you understand the properties of randomness, you can see that if your stop loss is significantly further away than your take profit or your start trail, you will always just by default and by the laws of probabilities have a high win rate. So you need this in order for this type of recovery to work, because if you have, let's say, a very high risk reward system with a very low win rate, and you try and use a recovery mechanism every time you lose, you're going to blow your account, because you could very well have a profitable system with a 30% win rate, and that means you're continuously taking losers, and that would not be an appropriate style of bot or style of strategy for this type of recovery mechanism. So building on that, now we can discuss what exactly do we want to test. And here the recovery concept is essentially after you take a loser, multiply the next trade's lot size so the next trade would fully recover all losses from the previous loser. In the case of Timebomb, the risk reward in the worst scenario is an inverse 4-to-1. Quite often it's better than this. It can be a 2-to-1, it can be a 3-to-1, but the worst case scenario, it's an inverse 4-to-1. Therefore, the lot size in the event of a recovery should scale 4 times. So let's say here that on the first trade, we traded with 0.1 lots. We were using a 0.2% stop loss. Therefore, we hit a loss here and we lost $54. But in the event of trade 2, here in this recovery scenario, we would have to quadruple our lot size. And if we're using a much tighter take profit of 0.05%, if we were to still quadruple our lot size, we would net out to $54 positive. Therefore, the second trade would fully compensate for the first trade, resulting in a neutral equity curve. And here, in this particular example in the backtest, which I'm going to show you guys, I think that on the first trade, you should always risk 1% of the account, because then if you lose both, so let's say you lose trade 1 and you lose trade 2, because the market, you just happen to have 2 losers in a row, you would only lose 5% of the account. So you're still not risking an obscene amount on any particular series of trades. And here I'm also capping the recovery to only 1 trade. If, for instance, we were to have 2 losers in a row, you're not going to scale again for trade number 3. In my opinion, that would just be way too risky, because then you start to enter more of a martingale style approach where you're just continuously doubling down, or in this case quadrupling down, which would just rapidly scale to an insane amount of leverage, which could very easily blow the account. Therefore, only 1 recovery trade is allowed. And if you hit the worst case scenario, you'll lose 5%. So it's still a relatively modest loss in the grand scheme of things, depending on your account size. And you could even further reduce your initial trade to 0.5%, so that if you were to lose, you would lose 2.5%. So you can keep it quite conservative with this approach. I'm not a fan of the super high risk martingale recovery methods. I think recovery can be an extremely good tool, but you always have to be mindful of how much you can risk and how much you can lose, or else it can be quite dangerous. So that's why I like this 2-trade approach to recovery with relatively modest amounts of risk on either trade. And a couple of further improvements I did were integrating a news filter. So in MQL5 and in the strategy tester, you actually can't use their calendar in a backtest. You can't actually run one in the strategy tester. But what you can do, and kind of a workaround around this, is you can use a script to download, like just live, all of the different historical news events and save it in a file. And then when you run your expert advisor, depending on if you're running it live or in a backtest, you can effectively toggle to read from the terminal or read from that historical file. And this enables you to actually backtest news events. So this is very, very important. And if you guys are interested in learning more, just send me a message and I can probably help you with that. But it was quite an interesting experiment that I ran last week, and I found it to be quite fruitful. So here, now we can go through the results. So on the top, you can see that we're risking 1% per trade with Timebomb with no recovery mechanism. Here, over the span of 1 year, we had roughly a 47% annual return with roughly a 5% drawdown. And here we can see that it's a nice equity curve. It's a little bit like the past couple of weeks have been a bit rougher up here, but still very much an extremely positive bot and a very good strategy. However, down here, we ran the recovery plus news filter. So those were the parameters listed previously, where you have 1 recovery trade. And here, over the same time period, we had a 72% return with a 5% drawdown. And as you can see, these little drops are when you would effectively hit the 5%. So this is when you had 2 negative trades in a row. And here you can see that in this kind of rougher period, this is where the recovery really shined. Because here, every time a loss was taken, and you can correspond it to these red lines here, the next trade was often a winner. So if we took a loss here we would quadruple. Loss, quadruple. And that results in almost this zigzaggy equity curve, which is still upward sloping because the recovery mechanism is working. So that was actually really, really interesting. And here as well, I actually ran another backtest where I turned off the news filter, and we actually had an 89% return with a 6% drawdown. So as it's simply trading more because there's no news filter, we do have a higher absolute return. However, you can see we are hitting the recovery mechanism more frequently. And this would simply be because high impact news days do have more volatility and do increase your probability of having 2 losers in a row. You also always have to be mindful that backtests can always be better than reality. Therefore, I would err on the side of caution and be more conservative and try and do something that perhaps reduces the risk of hitting it, even if you are hitting a double loser, even if you are reducing your overall net returns. I also ran this with US 30, but on US 30 what I did is I ran the base case scenario, the normal versus the recovery scenario with different degrees of risk, simply because I was normalizing for drawdown. Had I run the first one with only 1% risk, the drawdown would have been half of that in the recovery mechanism. So I thought that was not exactly a fair comparison, because really normalized returns are what matters for us as traders, because you can always increase leverage up to a certain drawdown threshold. So that's why I thought this was perhaps the fairer comparison. So here we can see that I ran an 84% return with roughly a 10% drawdown for the base case. And my apologies, this is the old graph. I ran it again. This was the graph with 1% risk. I ran it again and it showed an 84% return with 2% risk. So here with 1%, we were hitting sub 40% returns. And then at the bottom here, you can see the recovery plus no news filter, which was 114% annual returns with only a 9% drawdown. And in this one, I actually saw the news filter was quite bad for the US 30 set file. And this was simply because the US 31 only trades once a day. So if you start heavily limiting its ability to trade, it made the results significantly worse. Moreover, because the US 31 really trades the opening range breakout exclusively, and there tends to be a lot of momentum during that, it often benefits from more high impact news days. So that was also a very interesting experiment. So effectively, that's the video here. I thought that these results were extremely interesting and very, very exciting. That being said, recovery systems always come with an inherent additional risk, and that's why I want to test this for quite a few weeks, if not like maybe a couple months, before putting it live in my personal accounts. I started these just last week, and I've already been running it for, exactly one trading week. So I would encourage you guys to click the link in the description to follow along, but I'm going to run this for around a month to see how it performs, and then I might very well start swapping out some of my capital from more the conventional systems to this, depending on the performance. But let me know if you guys have any questions or comments, but follow along and I'll keep you posted on how it performs. Take care. Have yourselves a great day.